Hello and welcome to the weekly Outlook video by Adam Woods for BOAFX Trading Signal Solutions. We're going to go through the weekly calendar first of all, and then we're going to go over to the charts and have a look at how we're going to trade some of these risk events. Okay, so Monday, not much out in the way of Tier 1 data. We've got wholesale sales on the Canadian coming in forecasted at 0.2%, slightly stronger than last time. We have just had a good CPI data on the Canadian, so we will be having a look at the chart and seeing how we could possibly trade that. Tuesday 1:30 a.m. we've got the Aussie dollar monetary policy meeting. Very important, this one. We have had some rallies on the Aussie last week. Looking for see a little bit of a change in tone in monetary policy from the Aussie dollar, but what I'm especially looking for is for them to drop that phrase, the Aussie dollar is historically high. If we get that, then we could start to see this Aussie dollar turning around, especially with China starting to bring in some more monetary easing to help improve the economy. That's also going to have an effect on this Aussie dollar as well. So GDP quarter on year for China, important, but it's still coming in slightly softer. Industrial production, though, could be a slight improvement. So this could all help bolster the Aussie for that turnaround. Okay, so we're looking at the Aussie dollar on Tuesday. Let's go down to Wednesday. We've got Aussie dollar CPI quarter on quarter. Again, this is expected to come in slightly softer. Not too worried about this at the moment, although if we do get a higher reading, then that would be great. Don't forget, Aussie dollar is quite high on its inflation target at the moment. It's at 3%. They don't want to get much higher than that. So if we do start to get a CPI in, which is higher than expected, then we could well be looking at the RBA being under pressure to raise interest rates and the Aussie dollar improving its value. Okay, 9:30. We've got an important one on the pound. We've got the MPC official rate vote and the asset purchase facility votes as well. Now, previously the votes have come in 207 with McCafferty and Wheel voting for a rate hike earlier than expected, but we have had some changes in data from the pound. The CPI came out a lot softer at 1.2 last week. So we could well see a revision on this vote. There was some rumours going around that there would be another member that had turned to interest rate hikes sooner rather than later, which would make the vote come out at 306. If that happens, then we will start to see this pound rally. But I do get the feeling that we're not going to see that happen. If anything, we might get a revision on those two hawkish members, maybe changing their stance on there and it going back down to maybe 8.1 or even 0.09. Unfortunately, that is going to make the pound drop. So we need to be prepared for that. Any buy trades that we've got, we'll have to open hedges and we'll just have to get ready. But we'll have a look at the chart on that one as well. 1:30 p.m. we've got the Canadian dollar core retail sales. Again, expected to come in slightly higher, so more data there on the Canadian dollar. And we're having a look at the chart, how we can trade that. There is some interesting setups on the Canadian dollar at the moment. Core CPI on the US dollar at 1:30 as well. Again, this is important for US dollar. Inflation is expected to come in slightly higher. Any lower, then we could it could also bolster the fact that they're starting to look at putting their rate hike cycle back slightly to the end of 2015, even 2016. So we'll see. There's been all sorts of Fed comments coming out over the wires last week. Again, Canadian dollar back in focus. We've got the BOC monetary policy and the BOC rate statement on Wednesday at 3 o'clock. So they are quite dovish, and they have been for a long time. Getting them to change their stance there is not going to be easy. They need to see a real good data coming out consistently. We have had a good unemployment rate from the Canadian dollar. We had a good CPI from the Canadian dollar, expecting good retail sales. So let's just see what happens, what they come out with. I'm expecting them to be dovish. I don't think there's been enough data out to change their tone, but the US dollar Canadian is very high at the moment, and with that US dollar slightly weakening off, with the Fed having a bit of a back foot in interest rate hikes, then we may well see that start to strengthen against the US dollar. But we'll have a look at the chart and see where we stand. Canadian BOC press conference, obviously directly related to the monetary policy. Most of the moves are already priced in there, but it will be interesting what they have to say. 10 a.m. you've got RBA Governor Stevens speaks. Again, this is going to be very important. We've got to listen to what they've got to say. If there's any sort of hawkishness coming from him at all, then it could be very good news for us. CPI quarter on quarter in New Zealand. Again, this has been New Zealand dollar has been strong. It has been very strong. We've had a good milk reading from New Zealand recently. It could be the start of the rally. However, what we've got to establish is the fact that the RBNZ are consistently talking this currency down. So whether the strong CPI data is going to be enough to see through that bravado, I don't know. We're just going to have to wait and see what comes out and how it's going to affect the currency. There's actually no jawboning points on the calendar for the RBNZ to actually talk it down. So we're going to have to see what comes across the wire. Thursday we've got some, not really interested in the Chinese data apart from looking at it bolstering the Aussie trade, but as you can see, expected to come in at 50.2, same as previous anyway. So Euro, French flash manufacturing PMI, expected to be slightly softer. The Euro has had a good pullback off the respect of its support level at 125 from last week. So it's going to be interesting. These PMI figures coming because the Germans coming in as well at the same day. Again, expected to be slightly softer. It was softer again last time. It's going to put pressure on the ECB to do more. If it does, we're going to see that euro starting to drop again as well. Retail sales on the pound, again, unfortunately, we're looking at bad data coming out on the pound. Not looking good. The only thing that's keeping that pound up at the moment is the fact that the US dollar has taken that back step. They've got unemployment claims coming out at 130 on Thursday, expected to be slightly higher, okay, than the previous week. So let's just see what happens there. New Zealand dollar trade balance we've got coming out at the deficit there at minus 620 expected. I don't think that's going to be the case. I do think it's going to be slightly higher, but we are going to keep an eye on that. We have got a long-term sell position on the New Zealand dollar at the moment. So this data that's coming out over the coming week is going to be important to whether we hold that position or whether we just cut our losses on that one, because we have got we did have that good GDT last week as well. So let's just see what comes out of these two figures on the CPI and the trade balance, and then we'll make an assumption of what the best thing to do is. Okay, prelim GDP quarter on quarter on the pound. This did come out slightly better previously, but is expected to drop down again to 0.7. Again, putting pressure on the pound. So we've really got to have a look at that and see what happens on the charts there. New home sales on the US dollar. Not really too interested in trading that, although it may move some existing positions that we already have. Okay, so let's go over to the charts. Start with, we've got the Aussie dollar on there. The first announcement I'm going to be looking at the calendar is 1:30 on Tuesday. We've got monetary policy meeting minutes from the Aussie dollar. You can see here I've got some lines drawn on here and some ruler marks. We've got here. We've got a symmetrical triangle pattern starting to form on the Aussie dollar, which can very well be an indication of a turnaround in the trend. Now, I am looking to buy the Aussie dollar back from these sort of prices at the moment. We've had some slight easing on the pressure of it being pushed down, i.e. the US dollar has started to weaken. There's been a bit of a back foot on their interest rate hikes. So I'm looking for a turning around point, and this could be the symmetrical triangle here could be the answer. So the breakout point's normally about 3/4 of the way through the triangle, which is about here, which is October the 21st, which happens to be at the same time that they've got the monetary policy meeting minutes. So if those minutes come out with a fairly hawkish tone, then I'm going to start to buy this back straight away. I'll even buy it back before it breaks out of the triangle if it's down at the base of the triangle around there as well. Okay, so I'm going to be looking for those buys on the Aussie dollar very early on in the week, and also later on in the week as well. We've got Governor Stevens speaking on. Let me just find it a second. We've got Governor Stevens speaking later in the week, and also we've got CPI quarter on quarter. Now the CPI coming in on Wednesday is expected to be slightly softer, but I'm not going to let that deter me from taking a buy on these positions at the moment. The lowest I think this will fall will be 8.6, and I do expect it to be back up at 9,000 by the end of the year. Okay, so getting into buys at this low price now is going to be ideal. So we'll listen to what they've got to say on the monetary minutes, and then on Wednesday evening we've got RBA Governor Stephen speaks, so we're going to listen to what he says as well. But I'm hoping to see them drop that statement about the Aussie dollar being historically high, and hopefully we can start to play off against that little back foot that we've got from the US dollar and start to get a rally on this. So looking for buy opportunities. Okay, let's go through to the euro. Okay, the euro did start to rally last week. We haven't got a lot of data out early on in the week. Next week, just some very low-key German PPI, current account. We've got German BOAFX monthly report as well. We'll keep an eye out on that. It does move the markets occasionally, but the real data that we're going to be looking for next week is going to start coming out on Thursday for the euro, and it's going to be the French flash manufacturing PMI and the German flash manufacturing PMI. Okay, both of those expected to come in weaker. They were weaker last time. I don't expect any change. If they do come in weaker, we could start to see this euro push down. The only thing that I am concerned about the euro is that it may well pull back up to this 13,000 level. Okay, at some point, if we get a surprise better than expected PMI on the French and Germany, then that could be the start of the cause of that. However, I don't expect it to, and I do think we are going to be limited to this area of resistance that started to form, which was previous support before. So we did take a sell on this on Friday in the live room, but unfortunately locked in the entry level just before Janet Yellen spoke, just in case, and unfortunately was spiked out there. It has continued to come down. So I will be looking for either a new low below the previous candle, or I'll be looking for pullbacks to 12800 for sell positions as well. So keeping an eye out on that data coming out on Thursday. But until then, I should imagine we're probably just going to get a little bit of a consolidation. If we do get spikes up to that 12830 level, then it is going to be an opportunity to take sales before the announcements. Okay, moving through to the pound. Okay, so it hasn't been easy trading the pound over the last few weeks. The data has been dropping off, unfortunately, on the pound, and we did get a poor CPI reading last week, which is really not what we wanted to see. The only thing that's really been supporting this pound at the moment is the fact that the US dollar has taken a slight back step. And don't forget how far we've fallen over the past month. Okay, we've fallen right back down from that fair price 17,000, where we assume that interest rates were probably going to come at the end of this year, if not early next year at the latest. We had the Scottish referendum, which pushed things right down as well. We've had some political unrest with some new seats being taken on the political side of things. But we have come down to what I'd call a pre-interest rate hike frenzy price, okay, which is back down to this sort of price before interest rates were being spoken about, and we've had these sort of dip up and dip downs around this price. So I would say that we're probably going to see consolidation on this until we get further direction from the MPC, which is going to be on Wednesday next week, where we've got the MPC official bank rate votes. Now, don't forget, last time we came in at 2 to 7. Okay, two people gunning for an interest rate hike sooner rather than later. There was rumours of a third person starting to change their tone, but after that recent CPI data, to be honest, I'm not too sure that's going to hold up, and I think we might start to see some of them revert back to a later rather than sooner stance. Okay, so it's going to depend on how that rate vote comes into what's going to happen with the pound next week. The only thing that we can hope for is that the US dollar keep a neutral tone, start to have a bit more of a dovish tone about their interest rate hikes as well, and we can see some sort of consolidation between the 16 and the 16.4 over the coming months. I do think eventually it's going to rally back up to 16.6, 16.7, but it's not going to happen overnight. It's going to take time, and it might not even happen until the beginning of next year. So we could be in for this for the long haul. So taking buys off of these extreme lows here, and sells at the top of that range of 16.4 on the 4-hour chart. We could even experience lows as far down to 157.50. Looking at the weekly chart there, you can see that this is the 50% retracement at the moment on the Fibonacci. Okay, so we're just at the 50% there, but we have dipped through, and you can see the 61% there, which coincides with this area of resistance, is 15723. So that is a very real possibility over the coming weeks. But let's just hope that the MPC keep things afloat and we can stay above that 16,000 level. We really need to start, if we're going to take buys on this, we need to see that 16,100 level become strong support before we can do that, because we are otherwise leaving yourself open for quite a fall. Okay, so really relying on that MPC vote on Wednesday to which direction we take on the pound. Okay, let's move through to the Canadian dollar. Quite a bit of data out on the Canadian next week as well. We had a good CPI from the Canadian dollar last week. We also had a decent unemployment rate, unemployment claims from the BOC, from the Canadian dollar. I do feel at the moment that we are lining up for a retest of these lower levels of the 11,000. Okay, at the moment we've come very, very high with that US dollar strength. Things started to ease off a little bit. We've got this 50% retracement here, which pulled through, but it didn't make a new high. On both occasions, it's pulled down to there. It's made lower lows, and it's made it's made lower highs and slightly lower lows. I would be interested to see once this breaks through that 11,000 level. I think we will get that drop back down to 11,200 level. I think we will get that drop back down to 11,000. We've got the BOC monetary policy coming out next week and the BOC rate statement. I don't expect any change on the rate statement. The BOC are renowned for having a dovish tone even when data is good. So I wouldn't expect too much, but we've got core retail sales out. We've got retail sales out on Canadian. We've had that good data in the past. They may have to just pull away from that dovishness just slightly, just enough that with this US dollar weakness coming in as well, that we can get that drop back down to that 11,000 level. So I'm going to be watching these sort of levels very closely next week to see if they hold up as resistance, and to see if these lower highs continue. And it's going to be an indication for me to start taking sales on this in the short term down to 11,000. Okay, so moving through to our next real calendar mover is going to be New Zealand dollar. Okay, we're going to go over that just quickly because we have got a long-term trade on that one, and then that's pretty well much going to be the majority of it. Okay, so the New Zealand dollar has had that extreme low, with the RBNZ are still talking it down. They're still jawboning it down as much as they can at the moment, but we have got CPI quarter on quarter out next week on Wednesday at 10:45, expected to come in at 0.5%, up spot 2% from last time. Now, if that happens, we could start to see this New Zealand dollar rally. There's no points on the calendar that give the RBNZ an opportunity to jawbone it, but that doesn't necessarily mean that they won't, through other news channels, through interviews, etc., etc. So be aware that that could still happen even when it starts to spike up. But really, we'll be looking for resistance to be broken at 8,000. In the term of patterns, you can see that basically all we're really seeing here is a bit of a recess in the fact that that we could be getting a bearish pennant pattern appearing here, and we could be looking at that breakout. That's not the best line I've ever drawn. Let's delete those, start again. So we could be looking at that pennant pattern breaking out to the downside there, below that 7872 level, and then fulfilling this pattern down to it would be approximately 163 pips. So we'll be looking at around about the 7.7 level, okay, which is pretty well much where it's been before, so it's not unachievable. And also, don't forget, the Prime Minister of the RBN of New Zealand has also said that the Goldilocks price for the New Zealand dollar against the US dollar is 65 cents to the dollar. Okay, that's over 1,000 pips away. So we have got that long-term sell on this, and we're looking for excuses to keep hold of that. But it's going to be data reliant. Obviously, if the CPI comes in much higher than expected, and the trade balance comes in much better, then we could have to reevaluate that situation. Okay, that's all for this week. I hope you can make some pips from the information, and I shall see most of you in the live room. Thanks for watching.